Hey, welcome to our weekly top tens. We do this every weekend. The top option income ETFs that we cover, there's 163 of these that we cover. We do the top 10 yielders just based on the yield only. That's the degenerate list. We do top 10 total returners. There's some surprises there. And then we look at funds that are paying both high yield and good total return. There is such a thing. Some will disagree, but I will show you the math right here. So let's just jump right in. This is the yield list, the degenerate list, just based on their yield. Something to note, off the list was number 2. It's now number 12, HMYY from Yield Boost. They're now off the list. Number 10, previously unranked, is QBY from Yield Boost. Yield Boost, and you're going to see a lot of Yield Boost on this list. Maybe all of them are Yield Boost. Put credit spreads on 2x, sometimes 3x leveraged underlyings. So QBY does 2x on qubits. Put credit spreads, income only, capped on the upside, capped on the downside, not growth funds at all. So don't buy them and think you're going to get growth, because you're not. All right, paying 127% annualized yield. We take the last 3 distributions, declarations. One, the third one hasn't paid yet. That'll pay on Tuesday. The last 3, we average those. We take the current price and we come up with an annualized yield. Over a 1-year period, you're getting 127% yield. That's awesome. Now, the total return is negative, because if it's negative, and again, over here, and we'll do this list as well, but negative 115% annualized, again, you're not going to lose more than 100. And I don't even see how that's possible, because they're paying you every week. So, you could lose 90% of your money. I don't know. And of course, it depends on when you sell these. Don't buy high and sell low. So many people do that and say the funds are terrible. I don't know. So anyway, negative 115% if you reinvest, negative 95% annualized. If you don't, we average those 2 numbers and we get negative 105%. That is our average total return. All right, that makes sense. And some on this list are not negative, just so you know. Number 9, previously number 10, it moved up. MIDI, that is the Yield Boost. Put credit spreads on 2x micro strategy. I mean, that thing's been in the toilet since, for over 6 months. I think they peaked in July when it was great and everyone said all these strategy funds were great. And then it's tanked ever since, very Bitcoin reliant. And so people say it stinks now. I do own this, so we will put it back in blue. Again, only for the yield. It's at $5, but it's paying 127% yield, negative total return. Number 8, previously number 9, is going to be RGYY, Yield Boost Fund. 2x Rigetti is the underlying. 130% yield. Up from number 9, they're number 8 now, negative total return. But you'll see some positive coming up. All right, what are we at? 7 is Yield Boost Tesla Fund. I do own this. It is back to my largest holding. I have not been adding to this or reinvesting the distros. I'll show you why in a second. But I do own it, so we'll put it in blue. This fund is down to $3.96. Launched at 25, late 2024. So less than a year and a half, but more than a year. So it's just down, but it's paying a yield, 130%. It was number 6, now it's number 7 on the yield list. Negative total return is 18% negative total return annualized. 16 if you don't reinvest, negative. negative 19 if you do. So I don't anymore. But what happened was it was my largest holding for a long time. I have not added to it, but the Curve Silver Fund took its place as my largest holding, but then that just dropped in price. And they pay monthly, so I haven't been able to add to Curve Silver since their last payment, which was a couple weeks ago. So now TSYY is back to my largest holding, but not for long because I'm not adding to this one. All right, number 6, Yield Boost Coinbase strategy, COYY, 131.94% yield. They were number 3. Now they're number 6 in yield. Negative total return. If they're negative, we're not going to talk much about it because it's negative. That just means they are paying more than they are. I mean, they are losing more in NAV price than they are paying on an annualized basis. A lot of these are less than a year old, so we'll give those time. All right, number 5, previously number 1, May, Yield Boost Mara strategy. And I do own that as well. 134% yield. They were number 1, now they're number 5. Negative total return. Number 4, SME, Supermicro Computer is the underlying, the 2X version. Put credit spreads. That's all they do on these. 135% yield. Again, these are income-only funds. Do not buy them and think they're going to go up in price unless you buy them low. But at inception, they're all down. So anyway, they were number 8. Now they're number 4 in yield, negative total return. Number 3, Yield Boost IonQ Fund, IOYY, 138% yield. Again, based on the last 3 declarations, because one hasn't paid yet, and the price. That's all the yield is based on. The total return is based on what the price has done with the what they've paid out, and that is negative on IOYY. Number 2, RTYY, 141% yield. They were number 5. They're now number 2 in yield. Negative 49% annualized total return. So they're all negative, right? Look who moved up to number 1. I have been talking about this sucker, and it is Semi. That is blue. I own it. I will continue to buy this, maybe. I'll explain that in a minute. But they've moved to the top. They were 7th. They were unranked a couple weeks ago. Then they moved up to 7th last week. Now they are number 1 because their price is holding up. It is below launch. They launched at 25. It's a basket of it's Soxel, which is a basket of semiconductor funds. So they're holding up better. 149% yield, massive. But look at the total return, and this is down from last week. But 34% annualized if you reinvest, which I do. 30% if you don't. 32 average. So yes, total return and yield. It can be done. And if you want NAV appreciation with yield and total return, I will show you that on the next list. And that is the total return list. So we're going to sort by that. They should be blacked out. Yes, they are. So we'll just jump right in. Number 10. And again, we're on average total return. Drip, no drip, we averaged those 2. Total return annualized. This one was number 8. It is now number 10. Walmart, Rec shares, growth in income on Walmart. 46% yield, nice. 43% annualized total return, also nice. They're at $27. What did they launch at? Let's look at that just really quick. Walmart. This is a div channel. Okay, they launched at 25. Here you go. They launched at $25 in November, so only about 4 months old. They're now at $27. They've paid $1.72. So your total return, if you reinvest, 44%. If you don't, 43.62. Those should match up perfectly because I put them in this morning. Yes. So 46% yield and 43% annualized total return and price appreciation. So NAV erosion, I don't want to hear about it because it's yes, it happens. It has to happen with these funds. They pay out of cash. When they pay out of cash on X date, their cash balance drops by the distributions and the share price goes down. And these pay weekly. So it's if the underlying doesn't go up that next week to recover that, the ETF is going to drop further. So anyway, that's another story for another video. Number 9 was unranked before. Again, this is the total return list, and that is NVIDIA. Yield Max NVIDIA fund. They have dropped in share price since launch, but it's paying a 41% yield, and the total return is 50%, 61% if you reinvest the distributions. I do not own that. I've never owned this one because I buy other things. I buy what I think are better. But this is great. If you own it, I would reinvest, but not financial advice. All right, number 8, also unranked last week, is the Rex Shares NVIDIA fund, NVII. Again, launched at 25. It's at 25.68. It's paying 66% annualized with a 53% average annualized total return. So prices, it hasn't gone up a lot, but it's higher than launch, 66% yield. And some say if you can't get over 30% yield without NAV erosion, boom, right here. You sure can. It depends on the underlying, of course, and the strategy. Rex Shares does covered call. They do a synthetic, which mimics the underlying, up or down, kind of 1-to-1, not exactly. Then they do covered calls on half of those synthetic long positions for income. But if the underlying really runs up, then they can capture some of that. They're not fully capped on the upside. Whereas Yield Max sells covered calls on 100% of their synthetics, so they can make more income, but they are more capped on the upside, if that makes sense. Again, they're all just different, it's whatever you like. If you don't like NVIDIA, don't buy an NVIDIA fund. Or if you don't like NVIDIA, don't buy an NVIDIA fund. Anyway, you get the drift. All right, number 7, Yield Max Platy. I do own this. This one is my best total returner. And one day we'll go over my portfolio and I'll show you this. But my annualized total return is like 58%. I've had this probably close to a year. I don't know if it's been a year yet. But they are paying $52 or 52% yield, 79% annualized total return, 87% if you reinvest. So I do. I'm not at 87%. I did not buy it at inception, but I think mine's at like 58% annualized total return. They were number 7. They're still number 7. And the rest, number 6 through number 1, remain in the same spot as last week. So there's not really any surprises here. But we'll just run through them. This is number 6. Remaining number 6, K Gold, Curve Gold Fund. Gold's been on a tear. 11% yield, 85% annualized total return. Curve, you see the yields lower. They are much more conservative. But, 85% annualized. So total return. That's awesome. All right, number 5 is Round Hill GLDW. That is a covered calls on a little bit of leverage on gold, Spider Gold. And they're paying 38% yield. They launched at 50. They're at 60. So yes, you can get NAV appreciation on these funds. 38% yield, 90% annualized average total return. Awesome. Who's number 4? It's going to be Chippy. Yield Max, semiconductors. They're at $57. and they're ahead of launch price. Ooh, what did I do? What did I do? Did I go to the bottom? Sure did. Okay, that was weird. Chippy, $57. I think this launched at 50. Oh, we want to get back to these numbers here. Okay, 44% yield. Again, this is the yield rank, so they're 83rd in yield, but they're number 4 in total return, 94% average, 90. Well, we're going to call this 100%, 99.9% annualized total return if you reinvest the distributions. Yeah, so that's awesome. Number 3, we're getting there. Hang in. GOO Round Hill Google Fund. I own it. They're at $63. They launched at 50, so they're up in NAV, and it's Google. It's not a metal. You know, everyone says, well, gold and silver's just, you know, been on a tear. That's why those are up. This is Google. So, you know, it just depends on the underlying. All strategies are good. They're just different. You know, some will pay a higher yield, some will have a better total return. I didn't mean to turn the whole thing blue. I'll fix that later. So they're at $63. Again, launched at 50, 33% yield, 98% annualized total return, 101% if you reinvest the distros. So guess what? I do. All right, number 2, GDXW. Guess what? I own it. This is the Gold Miners Fund from Round Hill. We've got the Gold Fund, GLDW, at number 5, and the Gold Miners Fund at number 2. I own it. Again, $63. They're both over 60. This one's appreciated a little more. Again, I didn't buy it at inception, so my total return is not as good as these numbers, but it's great. So it's in the 40s, I believe, annualized total return since I bought it. It's a 68% yield, which is the highest of the top 10 so far, with a 127% annualized total return, 130 if you reinvest, and it's gone up in price. So yeah, 68% yield, total return's positive, NAV is higher than when it launched. So people say it can't be done. It can. It's right here. I'm showing you. Run the numbers yourself. You know, I do the last 3, pick the last one. You know, that's what most people do, just the last distribution. I don't like to do that because some of them are just so crazy. You know, on any particular week, I like to average 3 of them because, you know, you can get 20 cents, a dollar, and then 20 cents. So I like to average them. So, and I think that works well for me. Number 1 is going to be Curve Silver Fund. I do own that. It is, I did it again. Now the Curve funds pay monthly, which is not, you know, I like a weekly, but hey, it's 20% yield, $39 price. What'd they launch at? Let's look that up real quick. K-Silv. I know they're up. Flow show. All right, here we go. They launched September 30th of 2025, so we'll say 6 months ago. This says $24.92. They're $40, and they paid $3. So yeah, I mean, come on, it's awesome. All right, let's go back to here. This says they're at $39.25. That might be after hours price on Friday yesterday, but still above their price. 20% yield, massive total return. 178% if you reinvest, 171 if you don't. We average those two and we get 174. Now the last list I want to show you, and it's not an actual list, I didn't black anything out, but what we do is we do the yield rank, you know, the high 1, 2, 3, if they're on that yield list. Curve Silver is 144 out of 163 in yield, so it's down there as far as yield. but number one in total return. That's the return rank here. Then we do, that was previous rank. Then we do an average rank. We average this 144 and number one, and we get 73. The lower the number here, the better. If it's 1, that means they're ranked 1 on both lists, which we don't have. But we're going to sort that smallest to largest, and these are the funds that I really look at. Boom. Semi, it's the highest yielder. It's 18th in total return, so that average is 10. Rounded, obviously, because it should be about 9. But anyway, so that's the fund I'm going to buy this week. It's been the fund I've been buying every week because it's big yield, positive total return. It's paying way more than it has dropped in price. Look at number 2. It's winter. Yield Max, inverse strategy fund. It's been hot because strategy's been terrible. They're paying, let's see the yields. Okay, 106% yield. So that's 14th on our list. It didn't make our top 10. It's 11th in total return. So we average those two, and we get 13, the number 13. Again, the lower the number, the better there. I had to shrink it down just a tad so we can see it all on one page. NVYY from Yield Boost. Again, everyone says Yield Boost, they pay too much. You can't win with those. 103%, 35% annualized total return. Awesome. You got GDX or Nuggy, another Yield Boost fund. That's on gold miners, 2x gold miners, 104% yield. Their NAV has held up better than even Semi. Launched at 25, they're at 20. So they've lost $5, but they've paid like $8 in the short time that they've been around. Don't quote me on that, but it's up there. It's 104% yield, 29% total return. So they are 24th in return. We average that number with the yield number, which is 16th. We get 20. And then we'll just do a couple more. GDXW, 68%. Again, that one's NAV appreciation, 68% yield, 127% annualized total return. So if you want something that doesn't lose NAV, that's your best fund, in my opinion, right there. Then you got Misty. A lot of Misty haters out there, but they're paying 72% yield, and their total return is positive, 39% annualized. It's much better if you don't reinvest, 52%. So that's why I like to do these numbers, because it kind of tells you, are you doing better with or without the reinvestment? Some of you reinvest everything. Some of you don't reinvest anything. That's your call. You know, we all do this different. We're all trying to get to the same spot, more money. Then you got GDXY. That's the gold miners from Yield Max. You got Rex, NVII Fund. You got Hui from Yield Max, Palantir from Yield Max. I mean, it's math. That's why I want to show you this. It's not financial advice. I'm not a financial advisor. Do your own research. You can do it how I do it. That's why I do it, and that's why I do these videos, because I just want to share how I look at this market, and I'm happy with my results so far. I just started this January of 2025, so we're about a little over a year in, and making income. So, loving it. All right, we will play the song today because I like to do it on Saturdays. So we'll go to Suno. It's an AI song. I've created a bunch, but I've only done one for the channel because it's so good. Why mess with it? So we'll play that. I'll show a little video, and then we will talk again tomorrow probably. We'll see. But other than that, hit the like, hit the subscribe, and come back. Let me know in the comments. Not the live chat. The comments after the video, after the premiere is over, because that's where, they stick. So here's the song, and then I'll talk to you probably tomorrow.
We don't gamble. We get paid for it. Rec shares, yield max, we just ride that flow. Defiance in the blood, let's effing go. We get paid like degenerates, cash flow limitless. Top 10 yielders on the list, check the witnesses. Top 10 returners, drip or no drip, we don't miss. Bag full of divs, dividend gens in the abyss. We get paid like degenerates, charts all rigorous. X funds loaded, every pick is looking villainous. Yield so heavy, broke the metrics, broke the estimates. Welcome to the code of the dividend degenerates. Rec shares rocking that volatility, harness, turn that chaos into cash. I'm a yield max artist, yield max, yield boost, stacking premiums, that's my lane. Options on a leash, every contract on a chain. Curve on the side, yeah, we surfing in the flows. Bitwise on the block, crypto income as it grows. Tap alpha in my ear, data whisper in the play. I don't chase hype, I let the yield lead the way. Defiance in my DNA, I'm built to break the mold. They say it's too risky, I say watch the story unfold. Income blast from total capital, that's my bomb. Div checks detonating, but my mindset stay calm. They call it reckless, I call it the edge. Wrist man, it's tied while I'm walking the ledge. Every X date circle like a ritual we keep while they chase dreams. We get paid in our sleep. We get paid like degenerates, cash flow limitless. Top 10 yielders on the screen, all conspicuous. Top 10 returners, drip or no drip, that's the flex compound. Every cent turn the future to a check. We get paid like degenerates, charts all rigorous. X funds humming that cash stream continuous. Yield so heavy, broke the metrics, broke the estimates. Welcome to the realm of the dividend degenerate. I'm scrolling through the funds like a DJ with a crate. Curve, bitwise, yield max, line them up, rotate. Rec shares on repeat, that's the volatility spin. Turn the fear into a paycheck, that's a degenerate win. Tap alpha calling plays, I just listen, execute. X funds, information, whole squad looking to steward. Income blast from total capital on deck. Distributions like confetti, let it rain on my checks. Yield boost, engine revving, let's effing go on this ride. Every dip is a discount, that's a gift from the tide. We ain't chasing mean dreams on a one night stand. We're building empires off the income on demand. Every red candle, that's a markdown, not a fear. Defiance in the strategy, we double down here. Top 10 yielders, top 10 returners, that's the code. Drip or no drip, either way, watch it explode. Build wise to the curve, see the sectors interlace. Income blast, symphony deals all over the place. From Rex to yield max, this the path that we chose. Let's effing go, we get paid while the story unfolds. We get paid like degenerates, cash flow limitless. Top 10 yielders in the frame, all infamous. Top 10 returners, drip or no drip, still we grow. Dividend degenerates, say it with me, let's effing go. We get paid like degenerates, charts all meticulous. Rex, yield max, yield boost, every move deliberate. Yield so heavy, broke the metrics, broke the estimates. This is dividend degenerate. Roll the credits.
Later.